Yeah.
So you drew all of this. Apart from the box that I drew around it, everything here you drew that, yeah?
Yeah.
So now, in that box, starting from here, candle by candle, well, you don't need to explain each candle, but going through the price and the different things you marked out, explain this whole thing while using the mouse to point towards wherever you are.
Okay, so in the beginning there was consolidation.
Okay.
Yeah, because price was not in any trend. It was just staying within its range. And then we had the price go down, and then we made a low. And the low was in the London session, and that was the low of the whole session. And then the market started picking up, went towards the uptrend, and then we hit a high, which was the high of the actual session. And then again we started consolidating for a brief while, and then it went down, and then we hit a lower low. Thereafter the market started going up on bullish again, and then we hit an equal high, and then the market again reversed, came down slightly, did a low. So it finished. Actually, we could have put a low here. Maybe I missed that out. Towards the end of the London session, it was a lower low.
No, that's not the end of London. That's the overlap.
Sorry, the overlap of the London session. I actually, now looking at it now, I missed that out. But it was.
You can just draw that now.
Yeah. So I'll just put that in now. We hit a low.
You don't need to label it.
Okay, so and then we hit the market started bullish in the New York market, went bullish, hit a high and hit the highest for the session, and then
what is happening there?
There was a consolidation period there.
Into the box.
Yeah.
What? Is that not the consolidation?
No, sorry.
Delete. Click and delete. You have to use both the clicks and then you can delete. You can't just move it around. It's not gonna do. You have to click the box again.
Okay. Right. So for this bit, again.
Click again. What is that?
This is a consolidation. Okay.
What happened after the consolidation? Follow price by price and explain it. Okay, yeah, what I know. Easy, easy, cologne.
So then the market started going bearish again.
Yep.
Afterwards, went back into a consolidation, and then it had a little high, and then consolidated again actually for a few minutes. Should I put the box in there? But where are we on this
box?
What is this on
5
there?
minutes.
5 minutes.
You can just make this box higher.
Okay, so yeah.
Click it.
Right, so that whole area was consolidating, and then we went on a downtrend.
Was it aggressive?
It was quite aggressive actually, because
why do you say that?
There's 3 crows. Is it 3 crows or 3 soldiers? It's the crows, isn't it?
Crows.
There was 3 crows there. So it was quite aggressive. It went down, so we could have perhaps taken a sell there, in hindsight, and then we hit the low of that day, of that session, and then again it reversed and done a very bullish pull back, and it went up, and then it hit a high, and then it hit a high, and then from there done another consolidation actually.
That just happened in front of our eyes actually.
Oh, okay.
In the time, 5 hours it took to do this explanation. It took you it's not a bad thing, but like we're getting there. It took 4 minutes to explain this.
Yeah.
I'll explain it the way you explained it, and then we'll say where you went wrong, because I'll show you how quickly I'll explain it. Yeah, not that anything on my side, it's just with the practice you'll get speed. Look, price consolidated here, then it dropped, made a low like you said there, then price went up again, and then made the high there, like you said, consolidated there a little bit. Then it broke down, which pulled back basically if it's an uptrend. And then, like, oh, you forgot to say that, you know, the Fibonacci thing there. So it bounced off the 50%, and then it went back again. And like you said again, it made let's get that thing there. Equal. It made an equal high. What is the equal high? Because if you look to the left, that is a high, and it's basically the equal of that. Yeah. And then price again, it dipped and it came back into this Fibonacci area, but this time it came to the 63. And I think yesterday I mentioned I like to use the 63 for a level to catch a trade, and then it came, but this time again it consolidated, and I'm just going to explain it. Okay. And then it dropped. It's quite aggressive here, these two candles, they dropped quite a bit, and then it went a bit of consolidation there. Not like this consolidation here is not like this one and that one, because this one is still got a bit of movement, but ultimately it's moving sideways, right? And then again here we got a nice good aggressive move down, broke out of it, and then here prices moved pulled back, and then yeah, like, this happened right in front of us actually, that, you know, it's starting to consolidate there. And then obviously, as you can see right now, this candle is pulling, it's going more bullish, yeah. And that took 1.5 minutes, yeah. Anyways, this doesn't matter. Just you're gonna get there, yeah. Inshallah. So we'll see what we done wrong. Not wrong is what you missed, maybe. Yeah. Same again, consolidating, and this is actually the Tokyo session, yeah. And it went down. Price went down. It went up, and it consolidated and came down, yeah. So where it made the high,
Yeah.
if we look, because we want to find out why did price stop there, why did, you know what I mean, and how do we do that? Let's look left, see if we can find something. Sometimes you could find something, sometimes you couldn't. It doesn't mean always you'll find something, but if you do find something, then it'll be like, oh, now I know what happened. You get, look, we look left, look, I'm drawing the arrow. Oh, look, what's there? Consolidation, and then the high of the consolidation is right there.
Yeah.
If I move this right, can you see the high of the consolidation is right there?
Yeah.
Which actually you could say is basically an equal. So this is also like an equal high. Like, because if I put a line there, I'll zoom in the chart this time. Yeah? If I put a line, look, the high I'm trying to mark out is this one, yeah, and we'll use a different color because now I'm explaining it. Yeah, the high of the consolidation is there. Yeah.
Yeah.
And if I put a line there, can you see it's equal high of that, and then this is a relative equal high of that as well. So it's actually 3. So if I do a box, it's becoming quite cluttered now, the chart. Yeah. But look, ultimately, look, that's like a little resistance zone. Yeah. And delete that. Price pullback, and then obviously the Fibonacci, you draw that when price is moving back from that consolidation, that's where you can draw the Fibonacci, because you got your low there and your high there, yeah. And personally, I would same thing. Personally, when I see a long wick like that, yeah, I won't draw the Fibonacci on the long wick. I'll try to draw it from the shorter one, yeah. So I'll try to draw it from there, yeah, yeah. Okay, because the wick is not very what's the word, reliable or something, yeah, because a wick can happen in literally 1 second, whereas the body, when you got a bullish candle, it means the price kept on moving upwards for that whole candle for it to be a bullish candle. So it means the bullish people are strong, right? And for a candle to be a bearish candle, it means the bearish people held it going down for the full 5 minute or whatever the candle is, 4 hour, 1 hour, whatever the candle is. And price did pop all the way down, but the price, they weren't able to hold it down there. That's why ultimately it came up there, and this was a wick. That's why ICT says he does the Fibonacci from body to body. I don't agree with that. A bit of discrepancy, but I'll draw it through the low wick. If you see Q banks as well, in his videos. If I'm not mistaken, he also does a similar thing as well, where not exactly same as mine.
Wick to wick.
No, but also if you got a very long wick, he'll just ignore the long wick.
Okay, he'll just use the body.
It's like, do you know what outlier means? Outlier means something in a set of data that is like, it's just a one-off rare thing.
Okay.
Like all your 5 brothers are black. Your 6th brother, he's white. He's just an outlier. Did you get it? I don't know if that's a good example, but that's just an example, yeah?
Yeah, a one-off.
Yeah. Like a car manufacturer, they push out 10,000 cars. Toyota, reliable company, blah, blah, blah. Out of those 10,000 cars or 100 cars, whatever I said, about say 1% or 2%, they got like issues. This is outlier. Generally, the 98.9% of the cars they sell, reliable, good cars. You get?
Yeah.
Same way this wick is just an outlier. We don't pay too much attention to, or we don't. That information that wick gives, that when the low is all the way there, it's not that reliable or valuable information to us. More the valuable information mainly is the bodies and wicks that are small here. Those as well. Yeah. Price ultimately, if we basically here in this whole area here, really price is consolidating, but because we're on the 5-minute, we can see it's going up. And if you see what I'm drawing now, you can see it's basically ping-ponging in an area. Can you see?
Yeah, I can see.
Now obviously because there's so much stuff drawn on the chart, now it kind of makes it very cluttered. Yeah. If I go to 15-minute, can you see how now that consolidation I drew, it becomes clear that this whole bit is a consolidation. The higher time frame I go, the more clearer it becomes. Can you see that becomes clearer? Now if we go to the 1 hour, can you see that it becomes very clear that that is a consolidation, because these are all 4-5 candles, all literally jumbled together. Yeah.
Yes.
Let me delete everything. Yeah. And this is why traders fail. No, I would say the next bit, yeah, is because people are marking the chart and doing the levels on the small time frame, 5-minute, 15-minute. If you're marking your support resistance, you're doing your structure, Fibonacci, and these kind of things. Not that it can be wrong, not that it's wrong, but without the higher time frame narrative, you can be wrong. Because like generally here we can see today is going down, yeah, but on the higher time frame, it could be a bullish trend. But because my eyes or my focus is stuck on the 5-minute and the 15-minute, I'm ignorant to Mr. Multimillionaire Q Banks and Bernie, who's seeing on the daily and the 4-hour chart that's bullish, and he's waiting to catch a buy. Do you get it? That's why loads of people, they know the same things as other traders or multimillionaires or whatever it is, and they wonder why it's not working for me. Generally, I would say is because people, they're trying to do it on the low time frame, and the reason why people do it on the low time frame is because quick money. Some people say, yeah, but I'm a day trader. It doesn't matter. You can also do a higher time frame and be a day trader as well. Same thing. It's just people, they want the quick money. If I do the 5-minute, I'm getting, not that you're getting 5-minute trade, but you're getting a shorter trade, 15, 20, 30, 40 minutes. Yeah, you're in and out. Yeah, but because you're so clouded by trying to do quick trades and each day you want to make money, compared to like, oh, I'm going to do 1 or 2 trades in a whole week. If I'm doing 4 hour, 1 hour, I don't want to do that. But if you look at it, you waste so much time by trying to fiddle around with a small time frame. You got people 2, 3, 4 years, and he's still not being able to make a good chunk of money. It's 4:30 when you finish. Yeah. So now quickly I'll show you the high time frame. Yeah. Look at the high time frame. Yeah? Today, obviously, if we go on, how is this? We'll go on gold.
Yeah, staying gold. I like gold.
So here on the daily chart, yeah, look. If I just do the pen thing, yeah, look. No. Up, down, which is high, low. Up, high, high, and down. What is that now?
High, low.
So what should price do?
Go up.
And make a
high, high.
Fantastic. And this is what chart?
1 hour. I mean daily.
Daily chart. So now we know each day, ideally, we're looking for
bullish.
There could be 1 or 2 days where it's bearish, but in trading, you're never gonna get 100% win rate. It's a part of the business that you will lose. So like today is a bearish candle, but if you following the higher time frame, then today going bearish, you'll just sit back, because it's not in line with the trend that you're trying to follow. But if you're impulsive and no, I need to trade every single day, then okay, you take the trade and take the sell, and if you lose, you lose. It's up to you. If you win, yeah, but it's worse when people do the wrong thing and they make money.
The chances are,
Because then people think that, oh, I didn't follow the rules and I made money. Maybe next time it'll work out for me as well, and then it becomes a bad habit.